tuned into the big story here on the BDTV Breakfast Show. We unpack the conversation shaping Nigeria's economy in real time. This morning, our focus is on inflation, and for the third consecutive month, we are seeing a slowdown. Headline inflation eased to 22.2% in June, down from 22.4% in May and a high of nearly 34% earlier this year. This trend might look encouraging on paper, but what does it really tell us, with food prices still climbing and an important monetary policy committee meeting just days away? We ask, is this a turning point or just temporary relief? Well, joining us to break this down is Vincent Nwama. He's an economist and business journalist, and he will be joining us to unpack this conversation very, very interestingly. Welcome to the show, Mr. Nwama.
Thank you. How are you, Elizabeth?
I'm very well, thank you. Good to see you on the show this morning. Now, Mr. Nwama, firstly, inflation has now slowed for 3 straight months, settling at 22.2% in June. At face value, that looks like progress, but in your opinion, what's really driving this decline, and should we be cautious about reading too much into this decline?
Yeah, thank you. First of all, inflation is a very big issue in the management of an economy, and everybody knows that, and everybody tries to tread cautiously when it comes to discussing inflation. We have seen, yes, a downward trend in inflation. First, you know, there was a rebasing of the components of inflation measurement in Nigeria, what we call the Consumer Price Index. So that is part of what is driving the downward trend in inflation measurement. And of course, the agency responsible for measuring inflation in Nigeria, the National Bureau of Statistics, is telling us that, as in this case, inflation is going down because of changes in the prices of some of the major components of the CPI. Food, they say, farming season is around the corner, so the food supply is increasing. We've had cases of people going to the market to buy pieces of yam, because a tuber of yam went as high as maybe 8,000. Very lean tubers of yam. Maybe when the real season, farming season, sets in, the prices could come down. But I don't think they have come down right now. Maybe other things are contributing to the decline in food inflation, which would be something to celebrate. We need to see that, practically, when women go to market. These days women say, please follow me to the market so that you see the reality. So, because you need to know that the money you gave me last week or last month needs to be topped up. And that's what inflation does. Inflation measurement tells you that if you want to maintain the level of consumption you did or you enjoyed last month or last year, you need to increase the spending now by this measure of inflation. That's what inflation tells us. So that's the reality. If the demand for more money is needed, then we should try and reconcile the divergence in the figures versus the reality.
Right. And in a few days' time, we're going to see that the Central Bank's Monetary Policy Committee will meet. What's your read on this? Are we expecting a pause? Are we expecting a hike? Or are we expecting something completely unexpected?
Yeah, we're already on, I think we're already on a pause position after the marathon hikes. You remember that for up to 8 times or so, the MPC consistently raised the monetary policy rate. And their number one argument for that was, oh, we want to curb inflation. We want to douse inflationary pressure. And so we consistently raised interest rates from about 18.5% to where it got to in November. So 27.5%. And then the pause came. What happens in between 21st and 22nd of this month is the big question now. Yes, inflation rate is one of the key economic indicators. The indices we use to monitor or measure the health or how healthy an economy is. And I'm sure that the members of that committee are watching the trend. And the argument when they paused the hike was, oh, we are seeing changes in the economy. Inflation is stabilizing, and then it began to decline. If you look at the trend between inflation and interest rates, you discover that for most of the period, interest rate was below inflation rate until about middle of November or December last year, when they met somewhere, and now you find interest rate on top of inflation. So what we had most of the period was a negative, what we call negative real interest rate. Negative real interest rate being the difference between interest rate and inflation rate. And I'm sure that is what the monetary authorities must be looking at now. As of now, as of today, based on the figures given us yesterday by NBS, we now have a positive interest rate to the margin of 4.22 percentage points or something like that. And that may indicate that, oh, we may not just pause. Maybe it is time to reduce interest rates. So for those who have been arguing that they were raising interest rates because of inflationary pressure, I think that they may begin to look at the possibility of saying, let us reduce interest rates. So that may be a possibility at the next meeting, and I'll give you some reasons for that. There's still a need to reflect this economy. This economy needs a boost. This economy needs to be reset, as it were. This economy needs people to spend. Now that we have seen that inflation is coming down, but some hawks among the team may say it's not yet time, because according to them, they may feel that if we reduce interest rate now and liberalize borrowing and spending, it may put more pressure on the economy. So it's going to be a war, a battle between the hawks and the moderates, and those who feel that they may need more time for the economy to come out from where it is now. So yes, there is a possibility of not just maintaining the pause, but saying, let's reduce, even if it's half a percentage point reduction, or even a full 1% decrease in interest rate. These are possibilities.
Okay.
Because the argument for the hike was, oh, inflation was high. Now that it's coming down and the economy is still constrained, I believe there is a need to boost activities all across the economy.
Okay,
But
Mr. Moma, I might need to come in here actually. Let's talk about businesses and households themselves. Now, we're seeing that with the declining inflation rate, we're seeing that prices are still up over 22% year on year. Now, for the average Nigerian household and for small businesses, do you think that this slowdown offers any actual relief?
that still takes us back to what you're already discussing, because there is still a disconnect between the reality and the figures we are seeing. Take the average household. The average household is still constrained in terms of consumption, in terms of ability to pay, in terms of purchasing power. Because it's not just that you have money in your pocket. The question is, how much of goods and services can the money you have in your pocket, how much can you lay claim on? And with prices still elevated, you find that most families are constrained. There is a lot of constraints on families' ability to meet basic needs. That reality is there. That fact is there. If you talk about businesses, let me paint some pictures for you. If you are a lady, and when you go to when next you go to a shop that you normally buy your clothes from, maybe look around that shop anywhere here in the city where we are, you probably discover that the volume of goods in that shop, the volume of goods have drastically fallen, because with the high price, the current price of goods, that lady, that trader there, can no longer stock her shop to the level that it was, say, a year ago or 2 years ago. That is a fact. And some of them look around and say, I don't know where the money has gone to. The reality is that the money is still there. The 1 million, the 500 is still there, notionally. But in terms of value, in terms of how much it can buy, the price, the value has fallen sometimes by more than a 50%. And so you go to shops, or shops are half of what they used to be. That gives you an indication. That's a better index or indicator of the level of economic activities going on, and how much the economy needs to be reflected so that businesses can come back on their feet, so that consumers can come back and begin to consume. There is this trend in goods not being sold. Some goods are expiring in warehouses, in shops, and some of the manufacturers or the wholesalers are being forced to sell those goods at giveaway prices. These are the realities in the economy.
Right. Let's go to how the foreign investors might perceive what it is that we are seeing right now. We're seeing that Naira has gained ground recently. Foreign portfolios have picked up. Do you think that this inflation trend will support more currency stability? And what do you think this signals to investors watching Nigeria right now?
Oh, sure. Yes. More economic decisions are taken, in on comparative basis. Economic decisions are taken on the margin, in terms of, comparing what was, what is now, and maybe some projections. Sure. There is some, yes, if they look at what inflation rate was by this time, by June last year, find that inflation was about 34.9 something percent or thereabout. Even though we can't compare the two, because inflation last in June last year, inflation this year at 22%, the other one at 34%, with a difference of about 11 percentage points. They're not really comparing the same thing because the base years are different. The weights in the composition are different. But that's the decline in inflation should help foreign investors, to make projection, especially if they look back and say this trend has continued for the past 4 or 5 months and so on. Yes, it will help them because they want stability in their investments, in their returns. They want value in their returns. But then they will also look at what is happening in other countries. At 22%, we are celebrating 22% inflation. In Ghana, inflation today is about 13.7%. So if there are investors who are conscious of inflation, they have to choose among other variables that will determine their ultimate destination. But Nigeria offers other opportunities, other incentives, other things that can encourage investors. Yes, given the stability we are recording in the foreign exchange market, I mean stability in price, in the currency, in the exchange rate. Not that the exchange rate has fallen down drastically. No, the stability. These are factors that can encourage investors to come in because nobody wants to play in a volatile environment where exchange rate is 1,600 today. In 2 months' time, it is 1,800. The next time it is 1,000. They need some stability, and we are recording that. Yes, the question now is how sustainable will this stability be? How sustainable is this decrease in inflation? How sustainable will it be, both officially and in reality? What the factors that are driving the downward trend in inflation, will they continue for how long? There are so many variables, factors that are influencing, that are impacting on the cost of doing business in Nigeria. So many. And these are the factors that those investors, whether they are portfolio investors or direct investors, these are some of the factors that will determine how much exposure they can accept to have in Nigeria.
Right. So in this case, let's just look ahead now into quarter 3 and quarter 4. What are some of the major risks that could reverse this inflation trend? Do you think it's energy? Do you think it's floods? Do you think it's insecurity? What should we be watching out for right now?
I would say almost all of the above, as we have in the examination options. All of the above. All these factors are relevant to our economic reality today. Insecurity is something we cannot play down because it is a fact. Whether you're talking about food supply, which day do we not read about farmers being chased away from their farms or being killed or being kidnapped and farms being taken over by the bandits? And as long as this occurs, then agricultural activities will be constrained. And the ultimate result of that is that food supplies and other things, raw materials that come from the agriculture sector will be constrained. Agriculture is not just about food, it's also about industry. If we don't get the materials from the farms, then those ones that should go to the factories will not be there, and factories cannot operate optimally. This is a fact. And so, to the extent that insecurity persists, to that extent, will it be a factor in the overall performance of the economy. Even transportation of goods and services, transportation of personnel will be constrained because those movements are now high risk activities. Moving from point A to point B is a constraint on the performance in the economy of the economy. Then you talked about flooding. There have been warning about 22 states being at the risk of excessive flooding. Of course, that is something that we pose a big constraint on the economy. Is also one, it will affect movement. Any economy in which movement, transportation is hindered, is constrained, is already in danger, because whether you talk about, you cannot talk about economic activity without transportation, without movement, because goods and services must be moved from point A, where they are produced, to point B, point C, and D, where they are consumed, where value is added. Anything that constrains that is a big challenge to the managers of that economy. So if flooding, look at what is happening in what happened in Mokwa, for example. You know, even the sheer physical chaos that it created alone can disrupt the economy of 2, 3, 4, 5 states, you know, in the contiguous zone. So flooding is a big issue, and we hope that our governments at all levels are responding to that. You talked about another factor.
Last one I spoke about was insecurity.
Yes, I've talked about insecurity. Yes.
So I talked about energy costs, floods, and insecurity.
Energy. Thank you. Energy today is perhaps number one constraint in the economy, whether you're talking about big factories or small one-man business enterprises. The cost of energy must be addressed in this country. Somebody has said that you cannot run an A1, let me put it that way, an A-star economy on generators. Cannot do that. The sourcing of energy must be addressed for Nigeria and Nigerians to excel in whatever business they do, whether it's a big industry or factory or a small household company or enterprise. Energy at affordable price must be addressed. And that means that the government must explore the various sources of energy, including solar power. What is happening today is a big constraint on the level of economic activity in Nigeria. And I tell you, once we get it right, the current pricing of energy, electricity, and oil, diesel, fuel is not sustainable. It's not sustainable.
Go now, Mr. Wama. We have to go now. Thank you very much. But just in 30 seconds, talk to me about what lessons we can take from the playbooks of other emerging economies in terms of how Nigeria's inflation experience compares with them. Just in 30 seconds, please.
Yeah, the lower the inflation, the happier the people. Because if you have 1,000 and you have 1,000 naira and you have inflation rate of 50%, and that person has 500 naira and has inflation rate of 10%, I tell you that the second person is in a better position in terms of the purchasing power of the money they have. And that is what counts most in economic reality. It is how much you can command of goods and services based on the money you have.
Right. Thank you very much, Mr. Vincent Wama, economist and business journalist, for joining us this morning on The Big Story. Thank you very much.
Thank you. It's my pleasure.
Well, this has been The Big Story here on the BDTV Breakfast Show. My name is Elizabeth Musa. Stay tuned for social listening up next.